12 hours and gold changes good and bad. No little boy grows up dreaming of reading the monthly jobs report, right? This is not sexy stuff, but we need to look at this. I mean, this is what's coming out tomorrow, especially for gold stackers, silver stackers. This is what this endeavor comes down to. This is very expensive. This gold that I'm holding here, right? These are full ounces. There's 3 full ounces. Here, I'll throw another one in. There's 4 full ounces. Here, you want me to... Here, this one's in a bag. That's another, right? Like, all of this is so expensive. So we need to look at this stuff. We really do, especially when we're dealing with gold. This is from an article on Yahoo Finance. The article is titled, March Jobs Report Expected to Show Slower Pace of Hiring, Lower Unemployment Rate. And the article starts by saying, the March jobs report is expected to show some signs of cooling in the labor market after 2 months of robust gains shocked Wall Street to start the year. The monthly report from Bureau of Labor Statistics, slated for release at 8:30 a.m. tomorrow, is expected to show non-farm payrolls rose by 213,000. That's great. I mean, that's what you want. Non-farm payrolls rose by 213,000 in March, while the unemployment rate fell to 3.8%. This is great news. I mean, this is what we want. When we're hanging on every word that Jerome Powell says, and we're hoping that truly there will be 3 cuts starting in June, these are the type of numbers that we want to see. So let's get into it. It says again, these numbers are according to consensus estimates compiled by Bloomberg. This article has some bullets of like the main data. So I'm not going to read the whole article. I'm just going to go over the main data. So again, non-farm payrolls, 213,000 added versus 275,000 previous. Unemployment rate, 3.8% versus 3.9% previous. So we got to drop down. That's what we want. Average hourly earnings month to month, 0.3% versus 0.1% previously. So that's what you want, like more hourly earnings. Here's another one. Average hourly earnings year on year. So from a year ago until now, 4.1% compared to 4.3% previously. So that's a little drop. Average workly hours worked, how many hours people are working in a week, it's the same. Nothing has changed. Now, the report will serve as a test of the labor market as investors continue to watch for signs of cooling, but at the same time, hope for overall strength to support Federal Reserve Chair Jerome Powell's current base case for interest cuts later this year. Wall Street is, I mean, you think you and I, as silver stackers, we hang on every word that Jerome Powell says? I mean, Wall Street, you saw, they react immediately. After Powell, after the last meeting, Wall Street immediately reacted, and there actually have been some studies that show that just from what Powell says, even whether or not he actually follows through with anything he says, just from him talking, Wall Street responds. I mean, that is incredible. Think about Powell's position. He's not even an elected official. He's appointed, right? He's not even elected. And look at how much power this guy has. Like, just from him talking, all of Wall Street reacts instantly. And of course, often this gold here also reacts, right? I mean, look at where we are today with the gold price. Oh my gosh. I would have never thought. If you asked me 5 weeks ago, I would have teased and joked. In fact, I started this week off. I don't know if you saw my video. I started this week off. I was interviewing Preston, my local coin shop, my dealer, and I was teasing him. Oh yeah, if gold hits 2,300, you owe me a full ounce of gold. Yeah, I was just teasing him. I wish he took me up on that bet, because now look where we are now, right? So, all of this data, it seems like we're deep in the weeds, but we have to get deep in the weeds. I mean, we're putting a lot of money into this gold, and same for silver. Silver has jumped here. Got some silver for you. Right? Silver has jumped along with gold. We've been waiting patiently for silver to move, and finally, woo! Silver is moving. So I mean, this is what we've been saying. I'm not alone. Everybody in our silver stacking community, we've been saying, like, be patient. Don't cash everything out. Be patient. Watch. Silver is going to move. And I still absolutely feel that way. We have to hold. Don't cash out no matter how high gold is going as it rises up. This is not the time to cash out. Just hold it in your hand. Just like that. Look at how pretty it is. And then put it down. Do not just stop cashing out. Okay, let's keep going. Strength in the labor market has been considered a key to the economy avoiding recession, while the Fed keeps rates restrictive to help fight inflation. The March jobs report should re-anchor expectations for a cooling labor market, but not one that is showing significant signs of weakness. That's Bank of America's economist. And we're not the only country staring at this data. I mean, Switzerland cut their rates already, and everybody's watching Switzerland to see if unemployment is impacted, to see if inflation moves at all. It's a real risk. They took the hit ahead of every other Western country. Switzerland this time didn't wait for the United States to take the lead, which often is the case. Instead, they went ahead. So everybody's staring at them to see, and like they're like the test case right now. All these central bankers, like they work together. Nobody tries to be a cowboy, and well, except for the U.S., of course, we're always the ultimate cowboy. But in general, they move together. These central bankers. Let's continue with the article. The article says, broadly, other data out this week has reflected a still resilient labor market. Yes, that's what we want. A still resilient labor market. The latest job openings and labor turnover survey released Tuesday showed both job openings and hires ticked up slightly in February. Meanwhile, the latest data on private employment from ADP showed 185,000 private jobs were added in March, above the 155,000 seen in February. So this is great. I mean, labor is really, really strong. I'm excited about gold moving up. I'm excited about silver following and moving. But when I look at the economy, what excites me lately is to see these labor not only increasing jobs, but also wage increases, right? Wage increases have followed inflation. That's what we want. Now, as we get a little further into this, you'll see that we do want wages to follow inflation, but we don't want it to jump too quickly, because what happens then is that you get this cycle where inflation kind of feeds on itself. And we've heard this phrase, sticky inflation, right? Like, economists don't want inflation. They use this word sticky, kind of like plaque on your teeth, right? They don't want inflation to be so strong and resilient that we can't get rid of it. But at the same time, as wages go up, we don't want wages to shoot up too fast, because then employers and companies and businesses see that and they feel like they need to increase their prices, right, to follow the wages. And then we get this cycle, this like expectation of inflation. It's like a group think mentality that happens. So, that's what we really look at closely. And for this data that comes out tomorrow, really what we're really looking for is to see how Wall Street responds. I mean, those are the players, because just as we saw when Powell spoke and dropped this exciting plan of 3 rate cuts, the stock market immediately, Wall Street immediately responded, metals responded, and same thing tomorrow, right? We have, in my title of this video was 12 hours, but now that I'm looking at the clock, I think it's 13 hours, right? Until this information comes out. So we have to look and see, because gold is on such a ramp up. And as this information comes out, it could easily give gold another push. Now, what I see giving gold a real push is beyond what's coming out tomorrow. The real push for gold that I see is going to come out 2, 3, 4 months from now, when this commercial real estate issue really uh, comes to fruition, because those loans that are tied to these regional banks that lost their support. Remember, like about a month ago, all the support for regional banks was pulled out. That rug was pulled out, so they're on their own now. And when this hits, like 3 or 4 months from now, that is really going to have a serious impact on our economy. And when a shift like that happens, metals respond. And I see gold absolutely. I really think we're going to look back and think, wow, we thought 2,300 was expensive. I think gold is going to be absolutely out of reach. Now, I'm not saying go in and buy gold right now. I'm not saying that. And either way, I'm not a financial advisor. I'm just a guy stacking silver and gold. I'm not your financial analyst. I'm just a regular guy. But even I mean, like, look, you and I in the trenches, well, we can't afford $2,300 gold. I mean, come on, like we could afford some fractional if we're lucky, but this full ounce, I didn't get this when I got this. It was cheap compared to 2,300. Um, I do see it. I do see 3 or 4 months down the road from now. I do see prices for gold really shooting up because of all of those issues that are just going to explode on the economy. And I'm sure we will look back and think, whoa, 2,300,